This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say, at PennyMac, greatness lives here.
It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all.
That was Fed Chair Jerome Powell indicating that the Federal Reserve is dedicated to curbing inflation. Welcome to The Interest, your daily breakdown of news that matters. I'm Christine Stewart, and these are your top stories for today, May 5th. We start things off with the Fed's decision to raise rates by a half point. It's the second rate hike this year, and with meetings in each of the next 2 months, the Fed has signaled there's more to come. So what's next, and what will that mean for mortgages? Our Mike Savino has more.
After Wednesday's meeting, experts think that we could see increases when the Fed meets again in June and then in July. Now, Powell says that a 3/4 point hike is off the table for now, so experts think that we could see a half-point increase at each of those two meetings. But mortgage rates may not jump at the same rate. Industry experts say that lenders have been raising rates in anticipation of the Fed's decision, so Wednesday's vote, as well as potential increases over the summer, are largely baked into the current mortgage rates. The bigger question: what will happen as the Fed sells off its balance sheet, including mortgage-backed securities? Musings about active sales has likely increased volatility in the MBS market recently, as investors do not know how to interpret the vague signals that have been given. Industry insiders do think rates will continue to trickle up, possibly reaching 6%, but again, they think that that pace will slow down, unless, of course, something outside the Fed's control happens.
More news about the war in Ukraine or supply shocks or the COVID lockdowns in China, those could have more impact on 10-year Treasury rates and the mortgage rate by association than anything the Fed's doing.
In other news, Intercontinental Exchange has agreed to buy Black Knight in a deal that values the mortgage software provider at about $13.1 billion. The owner of the New York Stock Exchange is making a huge bet on the future of the U.S. housing market. Black Knight would complement Ellie Mae, the mortgage software provider that ICE agreed to buy for $11 billion in 2020. And finally, OFFERPAD saw record earnings for the second straight quarter. The digital home buyer and seller reported first quarter earnings were up 384% year to year. That's because OFFERPAD saw a 254% jump in the number of homes it sold. OFFERPAD also announced it plans to expand into 5 new markets. OFFERPAD first went public last September, and Wednesday's record earnings come after the company reported a nearly 300% increase to end 2021.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.